Hey everyone, I'm here today with Michael.abram with Cross Country Mortgage, who's my preferred mortgage broker, great guy. And of course, I am Michel Bron with the Bron Realty Group. And today is actually our first video of the year. We wanted to wait a little bit. A lot of people have already put out videos giving their predictions, but we kind of wanted to wait a little bit to see, how the market was going, the real estate market and the mortgage industry to kind of see where things were going. So today we're going to have a great conversation with Michael, and we're going to talk about where he thinks the rates are going, and not just him, but he's got a finger on the pulse of the mortgage industry. So this is an educated guess, and explain a little bit how mortgage rates and how they fluctuate up and down. So Michael, first of all, what's going on as of today with the interest rates?
You know what? I'm so sorry. My computer was kind of glitching there. What was your question on that? My apologies.
Okay, we can still go. We can still go. So I was saying,
Cool.
how are the rates today? Did anything happen today with interest rates?
Yeah, so today is February 1st, and today is Fed Day. So we actually had the announcement a short time ago that the Fed is raising rates again by a 1/4%. So that is immediately impacting things like equity lines and credit cards. But that doesn't impact everything on the long-term interest rates right away, like you would think, like a 30-year fix or a 15-year fix.
Okay.
So it's been a gradual increase, and they did it again.
Okay. And I think you mentioned earlier to me anyway, when we were preparing for the interview, that they're talking about another 1/4 point increase for when?
So the next Fed meeting is in March. It's around the 13th or 14th of March. They'll do the same thing that they did today, and we anticipate at least another 1/4% increase there. And then we're hoping that they pause and they stop and they look at everything for the last year and a half with all these major rate hikes,
Right.
and to see if they're really doing what they thought they were doing, which is slowing inflation.
Okay. Okay. So we're going to hope that they're going to pause and take a break and take a breather, go on vacation maybe somewhere, and leave us alone. So cool. So, I think it would be really interesting to briefly explain how sometimes we hear the rates go. The federal government is raising the rates, and they are at X percentage, 6, 7%, or somewhere around there. But yet, when you and I talk, you tell me, "Oh, Michel, this week the rates went down or the rates went up, and they fluctuate." And I said to you, "Well, I haven't heard any announcements. How come the rates are fluctuating?" So I think it would be really helpful if you could explain how that works and why the official rates may not move, but yet the mortgage rates that we are offering to buyers or to people who are refinancing are fluctuating.
Sure. So when you hear the rates are going up, it's impacting one thing, which is the federal funds rate and how the banks charge each other money. But that's not what 30-year fixed rates and things like that we deal with are looking at on a day-to-day. They're looking at the bond market tied to the treasury, the 10-year treasury. So when we look at an example of interest rates, you always take the treasury, the 10-year treasury rate, and we add a little bit of risk on top of that. In a normal market, at like 100, 150 basis points. So if you were saying, let's just say the 10-year treasury was 3%, and you add 150 basis points, well, then the rates are around 4.5%,
Right.
right? And so what we've seen is that banks have taken a higher risk factor in the last year. So you've seen them almost double what they would normally do. And that's why those rates are so high when they were in the 6s, 7s, even the 8s. But
Right.
now they're seeing rates, coming down because they're reducing their risk factor. So now you're seeing rates into the 6s coming out of the 7s and hopefully continuing to drop from there.
Got it. Got it. Okay. So basically, the official rate itself may not change, but the lenders, the bank, who are obviously, they have to make money somehow, they are taking a profit margin on these official rates that they borrow money from each other. And depending on how they feel about the economy, about the future, they will have a higher or a smaller profit margin based on their confidence with the economy. And that's why the rates offered to the public can fluctuate, although the actual official rate itself didn't change. Is that right?
Yeah, exactly. They're bracing themselves for a recession,
There
right?
you go.
Because in a recession, interest rates drop. And then everybody starts to want to buy, everybody wants to refinance. And what people don't understand is you're paying off mortgages and banks pay each other off. And sometimes they start to penalize each other. And that's how banks go out of business. So by increasing these margins of risk on
These
their
buffers.
pricing on interest rates right now, it's going to help them absorb that wave of people refinancing so that the banking industry just doesn't implode when this actually happens.
Yeah, like we've had in the past. Great. Okay, well, that was a great explanation. I know I understand it better. I hope our viewers do too. If not, you'll have Michael's contact information at the bottom, and you can talk to him about it. Now, let's briefly look into your crystal ball and give us your outlook for short term in the next couple of months, medium term somewhere around spring, summer, and then towards the end of the year. Where is the industry predicting the rates are going to be?
Sure. So I think we're going to see that it's pretty stable here through March. So let's expect it somewhere still in the mid sixes to high sixes. And I think as we get past that next Fed meeting and we head into spring and summer, you're going to see that inflation is coming down like they thought. And I do think they're going to start to lower those rates. And I think that's when you're going to start to see it starting to tip from the sixes into the fives.
Mm.
And then I think through the summer and into the fall, you're just going to have a really busy buying season with rates touching into the fives. Some people think into the high fours, but I do think it's pretty safe to say that rates will probably be into the 5% range.
Right. Well, that's great information, Michael, because the first thing I think about, when I hear this as a realtor is, people may think, oh, well, so I'm going to wait until maybe fall or the end of the year so I can have access to lower rates and have lower mortgage payments, which in essence is true, except that you and the rest of the country is going to be thinking the same way. And so you're going to be competing with a lot more people. And I'm not going to say we're going to regress back to what we are during the COVID time when the rates were super, super low. But basically, when everybody's looking to buy properties and you're competing against a lot of people, then sellers can maintain their price pretty high. Yet where if you're looking to buy now, yes, the rate will be a little bit higher, but in terms of price, you will probably have access to maybe lower prices and less competition, which will allow you to negotiate for a lower price. There's an expression out there that's being very, very thrown out there a lot, and some people hate it, some people like it, but I'll just say it. People say you marry the rates, but no, you marry.
No, you date the rate, you marry the house.
You date the rate, you marry the house. So you can always refinance your mortgage. You can always refinance your loan. The price itself isn't going to change, but if you can get a house or a condo right now at a decent price because you're not competing with everybody else, you can always refinance towards the end of the year when the rates go down.
Yeah, if you can afford the payment now, you're just going to be in a better position when rates actually drop to just lower your overhead on what you're paying. But you don't want to be in that position of fighting against everybody else for that same property that you could have bought 6 months before, and you just waited for your opportunity to strike and lower your payments per month. That's the whole point.
I'm one of those examples, right? I bought my home at a certain price. I married that, but since I bought my home, I refinanced my loan with you actually. I think 2 or 3 times. Because I was dating the rates and I was able to lower my payments. And so, and everybody else out there who, is going to be street smart is going to say, yeah, I'm going to take advantage of prices being a little softer right now. And I can always refinance my loan later. And also, like you said, in order to be able to buy a home today, you still have to qualify for, even if the rates are a little higher, you have to qualify for it. So it's not like you're going outside of your range. You're still qualifying for it. And you'll just be in an even better place, as you said, when you refinance your loan.
Right.
Well, this was really
people tend to forget that this was really where interest rates were supposed to be, into the 6s and the 7s.
Exactly.
This is actually pretty normal for our economy. People tend to think that those rates in the 2s and the 3s were normal, and it's not. That was an anomaly, and I don't expect that to happen again.
That is a huge point that you're making right now. We don't have time to get into it too much, but you're right. If people are waiting, or regretting that they weren't able to buy when the rates were at, sub 3%, then they'll never buy, because hopefully we'll never have another pandemic like we had before that caused the economy to stop, basically, and that's why the rates were so low. So as always, Michael, thank you so much for your insights and for your great information. If anybody has any questions, please feel free to reach out to Michael about mortgage rates, about getting pre-approved, which is so important if you're starting to look for a home or to refinance your existing loan. And if you have any questions about the real estate market, of course, feel free to reach out. The information is going to be right here down below. And again, thanks a lot, and we'll see you in the next video. Take care.
Sounds good, Michel. Thank you.
Okay. Bye, Michael.
Bye.